Hello and welcome to this week's video tutorial for Heriot-Watt University Trading and Investment Club. Today we'll discuss income statement, or also called profit and loss account, one of the three main accounting statements that interest investors. Income statement, or profit and loss account, measures company's performance over a specific period of time, usually over a accounting year or quarter. Financial performance of the company is assessed by giving a summary of how company incurs its revenues and its expenses through operating and non-operating activities. Income statement or profit and loss account gives investors many valuable informations. If investors compare profit and loss account or income statement over last couple years, they can see if the business is profitable, if the profits are growing or it's losing money. Usually investors want to see that the net profits of the company are growing and hence they can get a good return on their potential investment. And now I will draw a very simple profit and loss account or income statement. And we'll start with sales. Let's assume the sales are £1,000. From sales we need to deduct our cost of sales, which are costs directly associated with the sales. Operating profit, also called earnings before interest and tax. Then we'll deduct interest on, let's say, a loan. Then we'll have to deduct tax. So we are starting with sales. It's what company's revenues are. Then we deduct cost of goods sold, so the costs that are directly associated with the sales of goods. And by deducting cost of goods sold from sales, we receive the gross profit. Then we need to deduct our operating expenses, like wages or cost of stationery, office stationery, and we receive the operating profit, which is also called earnings before interest and tax. Then we deduct any interest we might have on our mortgage or loans, and we receive profit before tax. And then we deduct tax to receive the net profit of the company. In profit and loss accounts we'll find the information about the dividends as well, and therefore let's take our profit of £150. If company decides to pay half of the net profit, £75 in dividends, that gives us a retained profit of 75, and therefore a payout ratio of that company is 50%, as the company pays 50% of its net profit to the shareholders, and therefore payout ratio 50%. The other very important ratio that can be calculated using the profit and loss account is a net margin. Net margin ratio shows how much money is retained from company's revenues. And therefore, if you can remember from our example, net profit of the company was 150 and the sales were 1,000. And therefore, net margin of this company would be 15%. Which means that 15% of revenues or of sales is retained in a company in the form of net profits. Profit and loss account gives investors very important information about the business profitability. And if investors compare the previous years, let's say last 10 years, it is very important for them to see that the profits are growing. So if, let's say, year 1 the profits were £100, In this comparison, two companies, company A with very stable growth of earnings and company B with growth from year 1 to year 2 and then decline from year 2 to year 3 and year 3 to year 4. And therefore, I believe that investors would rather the company with stable earnings, stable growth of profits than the company B that the earnings are unpredictable and therefore you cannot predict what's going to happen in the next year, and therefore the investment would be very, very risky. Company A shows the growth, shows the development of the earnings, and therefore I think it would be a good investment. Profit and loss account is a very important document for all investors, as they can see if the earnings of the company are growing or declining, if the company is a potential buy or sell. However, profit and loss account and profits are not the only measure that investors should consider. The other very, very important is balance sheet, as well as cash flow statement, as well as technical analysis and various financial ratios. So profit and loss account is not a standalone answer to investors' valuation method. It's only a starting point, and it's a very, very good starting point. Thank you very much for listening this week. See you next week. Bye.